Welcome to Success Mindset, friends. Google has been dropping very significantly. We want to see this more in detail and then help you understand how you can position yourself. Because Google is one of the largest tech company, and it has dropped more than 10% from its all-time high. And then let's understand why it's happening, and then use our technicals and other analysis to uh, establish a right plan that aligns with the long-term wealth building. A quick disclaimer: I'm not a certified professional in finance. Whatever I'm doing here is my own research and sharing for education purpose only. And as I have said in my previous videos, I can link the previous videos how I used the technical analysis with all the available indicators that actually showed that Google has already been overbought. So as of May 7th, you can see it has already reached the overbought position, and then like MACD is pretty significantly high, and then it very well reached its top of the Bollinger Band. And then now you can see it's like retreating from then since then, and then the MACD is reversing, and it's yet to completely go negative, meaning like bears to take control. However, you can see that the daily level stochastic shows it's already oversold, and it's nearing the previous resistance, which most of the time acts as the current support. And that's why I want to make this video to highlight, is this panic sell, or is the company not in a good shape to hold anymore? And let's go look at the analysis that we have done. Why the $80 billion liquidation is the catalyst here. Google announced it is liquidating $80 billion worth of stocks to fund its AI infrastructure. So it actually has caused a significant misunderstanding that 80 billion worth of Google stocks are immediately going to be available in the market, and it will get liquidated. But it actually does not work in that way. The $10 billion private placement sold directly to Berkshire Hathaway is actually at a discounted rate, not the regular price that we see on the market. And that's one of the reasons a lot of people think, hey, the stock price is overvalued. Let's not about the valuation, but this itself is a good indication, because Berkshire Hathaway is known to hold great companies with strong fundamentals in its portfolio for longer term. That is one indication that it's not just the common people. Large organizations and investors also trust Google and then put their money in that bucket. And the remaining $30 billion is going to be public offering, and another $40 billion in ATM drip program. Both the public underwritten and ATM drip program is also not directly going to flood into the market. They will be the public underwritten program is basically like large banks, hedge funds. They directly work with Google to buy it at the negotiated price, and the ATM is the Google allocate the stocks through various like small brokerage, and then they will be released into the market very slowly, without even we are knowing that there's a sudden inflow. But this actually triggers that there is a huge inflow of Google stocks that is going to create chaos. let's look at the scale. The $80 billion worth of stock, in context, this is less than 2% of Google's overall market cap. This is what people should take a look at. Can a 2% liquidation cause chaos and then like significant price correction in the long term? No, this is just the trigger point. And then let's look at the Google's competitive advantage and then how it looks. So it is actually doing much better in terms of growth in the Gemini, which is new AI native initiative in Google. Even though Anthropic has done a really great job, Anthropic has a very niche market in the um, generative AI. And the user retention growth is also pretty good for Gemini. It has still significant other products in its portfolio. Yes, it has some headwinds. It has some antitrust lawsuits, and then uh, there are debates about its future judgment. But this is not new to any tech company. So these have created some corrections. These have created some structural changes to Google and Microsoft and various tech companies. But this is not something like once in a lifetime problem for any tech company. And then it has created a lot of strategic deal in Google Cloud with various companies. So this actually tells the business is doing well. As I shown in the beginning, Google is down 10% from its all-time high, and it is approaching its the recent resistance it crossed and then reached the all-time high, which usually acts as a immediate support. And this is where I have highlighted in our previous basic stock analysis. When you start spreading your investment into 10 equal bits, start around the near, recent support and then like wait for it to go like down further. Can Google go down from here? Possibly yes, because on a daily trend it is just got oversold. On a weekly trend it is yet to get oversold, which means that if you look a couple of weeks from now, you may still see Google going down or hovering around this price. But do the dollar cost averaging or pyramid averaging depending upon your capital. But the idea here is generally don't put all money just because it has gone down 10%. And at the same time, don't just wait for it to go back up. Always do the dollar cost average. And please comment if you want to know about anything else in the stock market. I'm happy to cover that. And if you like the video and find it useful, share it to someone. Uh, like and subscribe if you want to learn more updates.